thanks for joining me on my Market Report. My name is Mike. My Market Report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates. Sometimes it can come from the economic calendar or a combination of that with headline news and or geopolitical. But sometimes it gets even more confusing when the market sentiment changes and now good news is bad news and vice versa. So we're trying to give you an explanation behind what investors are thinking as to what's driving interest rates on those given days, and hopefully give you the information you're seeking. A little bit about myself is I'm a loan officer. I do work with a national lender. We do loans in all 50 states. So if I could be of any service to you, whether if it's a purchase or refinance, today these days most people are maybe doing debt consolidation, so trying to pay off credit cards. These are things we can help you out with. We can also give you the pre-approvals to buy your next property. We have a lot of great programs available, so please reach out if you have any of those. But more than that, we want to be a resource for you folks. We want to be able to answer any questions you guys might pose, so please feel free to reach out if you have anything we can help you with. In the meantime, we'll just jump right into the economic calendar today in our report here. We'll start off with the durable goods for the month of March. Now, February was revised a little bit better, revised a little bit higher from minus 2.1% to minus 1.7%. Forecast was come for 1%, and it came in a little shyer at 0.8%. So instead of drop, at least it got a little bit of improvement. So that part's good. Then we got some of the home price indexes, HPIs. We have the Case-Shiller home price index for the month of February. We'll just do it the year over year to spare time. So the month of January was revised a little bit lower from 19.1 to 18.9. Forecast called for 19%, and it came in a little hotter at 20.2. Now, Case-Shiller measures the 20 largest cities and metro areas in the U.S., so this is kind of gives you a gauge as to where those areas are, what areas are being impacted. Then we also got the Fhfa home price index. These are an index that gauges the conforming loan limits out there. So this doesn't measure any FHA loans or jumbos or any of these things. It's just conforming loan limits is out there. And its year over went from a revision in January at 18.2 to 18.3, and then jumped up to 19.4. So February was a pretty good month overall. Kind of just in time, getting the early start on the spring buying season. Let's move on to consumer confidence for the month of April. So the previous report in March was at revised a little bit higher from 107.2 to 107.6. Forecast calls for 108, and it came down a little bit. Not a lot, but came down some at 107.3. New home sales for the month of March. It looked like it dropped a bit. It's well, part of it is because of we had a big revision for the month of February. So if you look at 772,000, it was actually revised higher to 835,000. So forecasts come for 765, and it came at 763. So if you didn't have the revision there, we would have had more home sales for the month of March. One would have gone upwards. However, because we had the revision, it was a pretty big revision, it went downwards here. So news. We don't got a lot more news. They're still taking. We got the corporate earnings reports this week's actually got some big ones, mostly in the high tech sector, like your Apple and Google. Last week we had Netflix, which disappointed investors. I'm sure a lot of you have heard about that. Twitter, a lot of different, the FANG basically are reporting this week. And so we'll have a better idea as to where those companies are going. So that will have an impact this week. And then, as I mentioned in yesterday's report, the big economic data that people will be waiting for, and probably you might see some movement in bracing for it, is the PCE, which is the Fed's favorite PCE, which is the personal consumption expenditure. That is the Fed's favorite gauge for inflation. So stay tuned for that. As inflation is on everyone's mind. They are hoping that the data continues to show that it may have peaked and hopefully start subsiding. We'll wait and see. But again, we'll have to, we'll know on Friday a little bit more about that. Other than that, yeah, that's really about it. Again, China's been doing more lockdowns, so the concern yesterday spooked the markets, even though the stocks did rebound. Had a pretty big reversal on that, but today they're in negative territory. and the new lockdowns and mass testings in Shanghai, in Beijing now they moved it to Beijing, um, and stuff like that. So this is the concerns here is that uh, it pushed oil lower, which helped our mortgage rates yesterday. So that helped us out a little bit, as that could lead to more costs. However, the supply chain, time will bottleneck again and create maybe that demand won't be met, and therefore creating the supplies won't be met for the demand, and creating more, of course, more possible inflation with that as well, as we talked a little bit about yesterday. So again, we're kind of watching those areas, but nothing really new out of those that are impacting. So right now, we're kind of taking our cue from whatchamacallit. But we'll take a look here at mortgage-backed securities. We're up about, well, now it's 14. We were just up 19 basis points earlier. But earlier on, we were kind of flat for the most part overnight. And then Japan came in and started buying some bonds, and that kind of sparked. That kind of helped us out a little bit here. So bond buying came in. But since then, we're off the highs, and since we've been kind of dropping a little bit here. So we're still in positive territory and better pricing today. So mortgage rates are priced a little bit better today, depending on if yesterday, yeah, better. So we should see some better pricing with mortgage rates today. We didn't, as you can see here, we didn't settle on our highs. We settled somewhere a little bit lower, but we did settle a bit higher. I think it was around 45 basis points from what we did on Friday, which is still some good movement there. But right now, as you can see, now we're at 16 basis points. Treasuries still in this range, coming down a little bit. We're down about 2.76 now. So yesterday, I think I reported we're down about 2.77. So right now we're about 2.76 range here. So lastly, we'll touch on what's the average rate for a conforming loan limit that has points built into it. We'll start off with the 30-year fixed, which is at 5.32% right now. And then the 15-year is at 4.75 now. All right, so if you guys need a rate quote, or if we can be of any service, please feel free to reach out. We'd be more than happy to oblige. But if you guys like these videos, help us out. Smash that like button and share us. We greatly appreciate you folks. And we'll look forward to see you guys in tomorrow's video. Bye-bye.